What is good, Tesla family? It's Ray J back with another video, and in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what happened with the CPI report that came out this morning, what's happening with even more data coming out for tomorrow, and how it could affect the markets, what the news is saying about Tesla, as we have Elon Musk giving us a big update about Tesla's entry to India, and what the charts are suggesting for Tesla, SPY, and all these tickers once again. But before I break any doubles information, before I get into any more details, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Weeble link, which is down below and in the description. If you sign up for Weeble and deposit $500 into the account, you're guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 free stocks. And this offer ends in just a couple of weeks. Anyways, now let's break down what's happened to Tesla and the market. As of right now, the market took a bit of a hit after CPI came out, and I give you guys a warning about how a big move is coming to the markets. If we look at SPY pumped to 521 a share and it dumped 10 points today, all the way down to 511 a share. We got a big drop after CPI came out, and after that, the market traded sideways. Tesla, on the other hand, it basically saw a not so big drop by the time we were opening, but then just continued to sink as the day went on, as we had some negative news coming out from analysts. So I want to talk about what they ended up saying. I want to talk about some data and then break down what's going on with the charts in the next couple of minutes. So what's happening with all this data? Let's first talk about this. So if you guys saw my early morning video, you guys could skip this part. If you didn't see it, I'm going to go over CPI just real quick one more time for all the people out there who probably didn't see it. CPI came out year over year at 3.5%, above the expectation of 3.4%. Excuse me, guys. Then we also had month over month CPI came out at 0.4%, above the 0.3% expectation. Core CPI year over year was 3.8%. That's above the 3.7% expectation. And then core CPI month over month was 0.4% above the 0.3% expectation. Everything was hotter than expected by a little bit, not the best of news for the Fed and the markets. This caused the markets to see a very, very big move to the downside. CPI was a little bit hot. On top of all of this, we had Bowman giving a speech and a couple of things like that, and we saw some interesting changes. This is what the chart looks like for CPI. So for all items, we have the blue line right here. Notice how from January to February, this started to go up and went up even more. It went sharply up a bit in the month of March. And this is the first time where we saw multiple months where CPI started to go up. I also want to note that, and this is just kind of like more speculation, nothing's guaranteed here, but the CPI report was going up around July and August, and that's when the market started to downtrend. And by the time CPI started to come down again by the October report, this came out in November, that's when the stock market ended up bottoming and we saw a big rally back up. So we're seeing a very similar pattern right here where CPI is trying to go up, the market's coming down just a bit. Are we about to see the market continue to sink or not? That's going to depend on even more data. But when it comes to core CPI, that's CPI without food and energy, right? The purple line right here. This has been very consistent. It's been dipping just a little bit. The last report was a little bit harder than expected. So we'll see how this goes as well. But CPI is very important right now because this is related a bit to PPI, which is coming out for tomorrow, especially because crude oil is going up. So the price of a barrel of oil is continuing to go up. This is very important. It's affecting inflation, causing it to go up as well. And these things have a high correlation, as you guys can see historically. So this is very important, especially as we're seeing more tensions around the world that are perpetuating, especially in Iran. And with this happening, it's going to have a big effect as we approach the summer. So I'm going to continue to just monitor all of this data and see how it goes. I want to also call out this from the Fed. So for May, okay, for the next FOMC meeting, there's a 96.4% chance the Fed is going to keep rates the same. All right. For June, this changed. Before, there was a 56% chance the Fed was going to cut and a 40 something percent chance the Fed was going to keep rates the same. This ended up changing because now the probability of the Fed giving us a rate cut in June has dropped to only 18%. And the odds of the Fed keeping rates the same in June have gone up to 80%. So this went up and this one went down relative to what it was like yesterday. I remember this is important because now there's a very good chance that the Fed is going to keep rates higher for longer. This is a bit more bearish news for the markets. If the Fed continues to do so, what this means is the Fed is going to keep rates higher, which is going to cause more pain for the economy and more potential contraction than what they were initially expecting, more than what the market was expecting as well. This is important for Tesla because Tesla is very sensitive to interest rates. Okay, this is the same thing with all the other car companies out there. So this is some big news so far, and we'll see if this changes. Not too sure about July yet. We need to see more data for that to be determined. The market is neutral right now. We're not extremely fearful yet. We're not extremely greedy. We're at a point where the market's gone bought back up again. We'll have to see if that continues tomorrow or not. The market is still quite greedy, but there are some shifts here. The puts and call options ratio is going up. We're seeing more puts being bought, more shorts piling in, and simultaneously, market volatility is also increasing. So we're starting to see more fear perpetuating within the markets. That's very important and worth noting. As far as Tesla goes, we have some new news that came out. Tesla analysts have cut their price targets on the stock, as we saw many of them out there, like Piper Sandler. They're still giving Tesla an overweight rating, saying it's going to outperform the market, but now they're saying that it's going to run to about 205 a share instead of 225, which is what they were saying before. We also saw analysts at Bank of America say that Tesla will likely run to about 220 a share instead of 280. That's another cut that came. And we saw more news about this from other analysts, such as Jeffries. The list goes on, but we're seeing a lot of this happening. A lot of these analysts also cut their deliveries targets. I went over this news during my second video of the day. So if you guys want to see more information about this, just look at my second and third videos. I did go over this in a lot more detail. There's also news that Elon Musk is going to be meeting Prime Minister Modi of India. He's going to be meeting him very, very soon in just a couple of weeks. That's great news for Tesla. And Musk said that Tesla will be entering India. He's actually very confident they will be. He's saying it's going to happen in the future. They just want to continue to do as much as they can to adjust policies, especially for the EV sector and other regulations. But this is a great piece of news for Tesla as well. We had volume at 84 million. That's a little bit below average. And Tesla ended up seeing the short volume dropping a bit. So it's kind of flat right there. Morgan Stanley gave Tesla an overweight rating just 2 days ago. Goldman Sachs gave Tesla a neutral rating. Moving forward, financial estimates have shifted a little bit downwards towards as time goes on, but this could actually increase later on. Of course, we're still big bulls for the long term, but things are shifting a bit. For the price-price ratio, it's a little bit low right now, as Tesla is still not as strong as what it was like before going into like last year, but this could also shift later on during the year if Tesla does improve. Wednesdays tend to be green only 48% of the time, and we tend to see more volatility at 10 a.m. and 2 p.m. Eastern Standard Time. And that's it for data. I'm not really seeing anything else that's too significant. So, one last thing I want to talk about before I break down the charts. What data is coming up for tomorrow? Why is tomorrow another absolutely massive day? Well, for tomorrow, we have the second part of CPI coming out. We have PPI data coming out, and this is going to be very important. PPI is the producer price index. It's like CPI, except from the producer side. This is going to be very important when it comes to inflationary projections, because this is more impacted by the manufacturing things that I was showing you guys earlier and factors like that. So this is going to affect CPI during the next month. This is a very important leading indicator. Now, we're expecting a slight increase, by the way, for core PPI by about 2.1 to 2.3%. It was at 2% last time, so a slight increase is expected. I think that this is going to be moderate. This is usually not that crazy, but the big thing I'm watching for is this right here, where I'm highlighting PPI year over year. That's going to be very important. We want this to be between 2.1 and 2.2%. We're expecting an increase because of energy and such. So the question is it going to be hot? When I talk about the charts, when I say is it going to be hot, I'm referring to 2.3% or higher, or is it going to be aligned with expectations or cooler, 2.2% or below that? We'll have to wait and see, guys. A decent PPI could launch the market higher if it's 2.2% or lower. If it's above 2.3%, that's going to be bearish for the markets. Watch for that very carefully. PPI comes out tomorrow, an hour before the market opens at 8:30 a.m. Eastern Standard Time. So get ready for that. And then we have a bunch of Fed speakers like William, Collins, and Bostic giving speeches later on during the day tomorrow. All right, so that is it for the data. The main piece of data is coming out an hour before market open tomorrow. I'll be talking about this, and watch for PPI. Without further ado, let's talk about the charts. What on earth are we seeing? Tesla has this big bar right over here, and one could argue that there is a possible head and shoulders like structure that could be developing right here if we kind of pop up tomorrow and then start dropping again. Now, from a technical standpoint, we are looking a little bit weaker on Tesla when we look at like the 4-hour time frame. We're just about to get a bearish cross in the PPO, and it does lead to the possibility of us kind of like popping and then dropping lower. There is a risk of that on Tesla, especially because we're getting external bad pieces of news. So technicals do look a bit more bearish after this big red bar that came today. However, I wouldn't solely trade based off technicals, as another big factor is going to be what we get from the data, the PPI report. So just to be safe, we have to look at both ends. If we get a decent PPI and the whole market bounces, look for Tesla to push to at least 173. That's where our 50 and 200 EMAs happen to be. And if we break past that, look for 175. If we're bearish, Tesla needs to lose 170.5. If we lose this, 67.8 is coming, followed by 165. And there's also the notion that there could be a head and shoulders forming on Tesla. So this could be like a left shoulder here. This could be the head. Maybe Tesla pops a little bit and then eventually comes back down. That's a strong possibility as well. The chart favors downside on Tesla, but just to be safe, we'll have to see what happens to the overall market and PPI. So keep that in the back of your mind and be very open minded nonetheless. For SPY, we have a big red bar as well. However, what is good about SPY is we're trying to kind of curl right here on the MACD, and we're showing some signs of life, in my personal opinion. The last time we hit this 512.5 area, we saw SPY try to rebound a bit, so we'll have to see if that ends up being the case again. So if we're bullish, and technicals do favor SPY trying to get back up to about 516, if we are bullish, you're going to be looking for a move all the way back up to about 516.5 and then 518. For bearish, you want to see this thing basically lose 512.5. If we lose that, we're going to be coming all the way down to 510.25 as well, and then 508. Technically speaking, it looks like 516 is coming, but just to be safe, let's see what PPI causes. If PPI is hot, we come down. If it's decent, we're going to be coming back up. We'll have to wait and see. Technicals favor us trying to get back up, but just to be safe, I'm going to watch and see what the data suggests. For the QQQ, technicals suggest it's going to come up to about 440 looking at this current trend. If we're bearish, however, if PPI is hotter than expected, we're coming back down to 434, then 432. If PPI is decent, we're going to be pushing all the way back up to 440 plus. We'll see if we get a nice push up to 440 or so, and we want to be very, very patient nonetheless. So we'll see how things go. But let me just note that technicals do show a little push to about 440 attempt that could be coming, but just to be safe, it all depends on the data. What else is going to affect this is going to be Nvda. Nvidia looks bullish from a technical standpoint too, suggesting that this could help the QQQ push higher, but nothing's guaranteed yet. Technicals alone are not everything. If we're bullish after PPI comes out, we're going to be looking for a push to about 885, if not 890. If we're bearish, we're going to be coming all the way down to this previous resistance becoming support at 854. In my opinion, I'm in the middle right now. It could go either way, but I'm going to be watching just to see what the data looks like. So we're going to easily see at least a 10 to 15 point move on Nvidia. It does look bullish from a technical standpoint, but just to be safe, let's wait and see what the data gives us. For Aapl, Aapl is currently looking a little bit weak. Could rebound it and drop a little bit lower looking at this bar that formed on it. And we also have been downtrending for the last couple of weeks. So it looks more bearish overall. If PPI is decent, we could be looking for a push for 169, if not 170, but an eventual move back down could be followed by that. If we're bearish, we could be losing 167.5 and eventually sinking lower. Overall, it looks a little bit weaker, so just keep that in the back of your mind, just to be open-minded and such. So that being said, I went over the main five I typically go over in a lot more detail. Tesla is looking a little bit weaker right now because of all this negative news that's coming out and because of what we saw from CPI. So the best thing to do is just be very patient and give this a little bit more time, and we'll see what the move is for now. All right, so that's the best thing to do. Let's just see what PPI gives us, and we'll see how things go. Now, I just want to focus on the other charts out there just to see how things look. So, what am I seeing on basically, like PPI and for the others? So for Palantir and the others, I just want to note that Palantir is looking a little bit more bearish from a technical standpoint, especially when we look at the 4-hour time frame. We're about to get a bearish cross in the PPO, and we're starting to see some sellers stepping in. If we're bullish after PPI comes out, look for 22.8. If we're bearish, we're going to be coming all the way down to about 22 flats, then 21.88. My gut favors the downside looking at the current trend right now. So it does favor coming back down to at least like the low 22s. So technically speaking, it looks a little bit more bearish, but just to be safe, we'll wait and see. Supermicro is kind of stuck between two EMAs. If we're bullish, we're going to be looking for a push all the way up to about 933. If we're bearish, we're going to be coming down to 875. Overall, the chart's looking bullish, though. It's trying to cross in the 4-hour. We could be looking for a move to at least 933, so watch for that very, very carefully. For Rivian, we're looking a little bit weaker right now. If we're bullish, look for a test of about 10.42. If we're bearish, we're going to be coming all the way down to about 10.1. This chart does look a little bit like it's going to dip a little bit to about 10 flat. So it looks a little bit more bearish. For SoFi, we're looking a little bit weaker, but we're at support at 7.5. If we get dragged down tomorrow, we're going to be coming all the way down to 7.25. If we push back up, look for 7.8 in the higher levels. We have a potential inverse head and shoulders in an uptrend, so this chart does look a little bit more bullish. I could be looking for a push to at least 8 plus, so we'll just have to see how it goes. For AMD, we're looking a bit more bearish. We're on a bit of a downtrend. If we continue to sink, we're going to be looking for a move to about 162 and then a bounce. If we're bullish, we want to see it break 170.5 and start pushing for 175. So be very patient and see how things go, at least from here. But the chart does look a little bit weaker on AMD, in my personal opinion. On top of all of this, I wanted to call out, let's just see what else is there. We have ARM. ARM is looking a bit more bearish. If we start sinking, look for a move to about 122.8. If we're bullish, we want to see it break 127.2 and start pushing higher to about 130. The chart does favor a move back down to about 120. This is like 122.5. It looks a little bit more bearish as we're rejecting off our 50 EMA. But just to be safe, we'll see what PPI causes. For Coinbase, we look a bit more bullish as we have a gap to fill and we got a nice liquidity grab right here. Going to be looking for a push all the way up to about just under 260 is a real possibility. If we end up losing 250, we could be sinking back down to about 245, but the chart does favor us getting very close to 260. It does look a little bit more bullish. For Amazon, we have this nice little drop to our 50 EMA. If we lose 184.5, we'll look for 182.34. If we bounce off that, we're going to be looking for a push to about 186.5 and higher levels. Overall, it looks to me like it could retest this low right here during the pre-market, and we'll see if we get a big bounce off PPI to 188 or a rug pull. It does look like it could actually bounce as we're holding our 20 EMA nicely. We saw some buyers defend it, so we could be looking for a bounce, but just to be safe, it depends on the data. Same thing on Meta. In my opinion, Meta could try to attempt to push higher to about 525. If we lose 515, look for a drop down to 507 again, but it looks like it might try to rebound a little bit. For Microsoft, we're kind of stationary. We have 426 if we're bullish and then 420 if we're bearish. We're kind of stuck in the middle. I'd rather just give this time as it's not really moving much. It's just going back and forth and back and forth. Google looks bullish overall, but it might dip and retest our 20 EMA again. Watch 156. It might test this and bounce back up to 160. If we lose 156, we're dipping to 154. There's an uptrend right here, so we'll have to see how it goes. For the VIX is on an uptrend right here. You guys can see it's been uptrending quite a bit and may continue to uptrend as time goes on. However, we'll have to see what the move is tomorrow. If we end up losing this is what 15.44, we could be sinking to 14.8, and this would be bullish for the stock market. If it bounces off of this and pushes higher, that's going to be bearish. As of right now, it's on an uptrend, which is favoring bears for the stock market for now. But we have to wait and see if PPI helps this continue or not. The dollar got a big bounce after we saw CPI go up a bit. But here's the thing, guys. We're at resistance at 105. If we reject off 105 and come back down sharply to 104.5, that would be bullish for the markets. If it keeps breaking out like this and breaks past 105, that's going to be bearish. As of right now, it's at resistance, so we'll have to see how it goes. With that being said, that is it for the video. I went over the majority of tickers that most people are interested in. We'll see how things go for Tesla. We are looking a little bit weaker on the 4-hour time frame, but I think it's very important to just give Tesla some time and see how PPI ends up affecting us. So watch the levels I called out, guys. I want to thank you all so much for listening. Have an absolutely incredible rest of the day. I'll see you guys very soon tomorrow to talk about PPI all over again. Have a great day, guys. Thank you, and peace out.